Hello, everyone. We are live again in our complete team, Ivan and I, like usual. I've been missing for a while, and we're back. So we got some market updates, strategies we're looking at right now, updates on the previous calls. And if you have any questions, if you're joining us from our Discord, you know that you can ask questions here. You can ask questions under YouTube and anywhere you're watching. Give us suggestions, feedback on the app, ask us questions. We can give you a quick demo if you're interested. But usually we talk about the market, the stocks, the strategies, show the platform a bit, and then we just ramble about the market and what could be a good, interesting trade. How was this week, Ivan?
This week has been slightly surprising to me. In a sense, I thought that some stocks are going to go up based on some of the gamma nodes, but they actually did not. But overall, it's doing good. I just entered a bunch of CSPs, new long trades. I'm trying to get away from the dollar as much as I can, following the trade dates. Yeah, you.
This could be interesting to hear to me. You're much more sophisticated, so I would love to hear what you're doing to learn a bit. For me, mostly I've sold everything except, let's say, 6 stocks or something like that. And the biggest positions, IREN and CoreWeave, jumping up and down, extremely volatile. I'm not doing anything with them currently. I'm waiting for them to go up a little bit to basically sell extremely risky cover calls and sell them completely. And then I go to my dividend strategy next.
Thanks for reminding me, IREN. I'll have to probably sell some cash secure puts on before their earnings.
Yeah, maybe you should have yesterday because they grew a bit today.
Oh man, yeah. Yesterday I was supposed to do so many trades, but customers had some great feedbacks on the platform, so I can actually, that's a good segue. I can show some of the updates.
Yeah,
people might be interested in. So we know that a lot of people use manual trading, and we've improved manual trading a lot. You can see here on the right side, you can place a trade into a manual broker, paper trading, right from any screen, so you don't have to scramble to get there. And if you have, I don't know, going to find deals, you want to test the screener, you want to test how selling MU, you can just place a trade here as well. It's already pre-populated. You can just click record trade, and that's it. You can see it then in your manual broker. On top of that, we've noticed managing cash was super complicated for manual brokers. So now that's fixed also. You can add cash, you can withdraw cash, basically simulate whatever you would do in your manual. And then also you can do set the current cash. Previously you could set initial cash balance from the beginning, but that's good for like paper trading. But I know people like their current state in their actual broker to test QuantWheel. So now that just became a lot easier. And if you want multiple brokers, you can also add more payments very, very easily. This was a customer feedback. Thank you all for like a jump call with us. This, as you can see, helps us improve and make it super, super intuitive on that front. Then the first signed version and the version 1.0 of the GEX bridge is live, and you'll see later in this call, but you can now download it straight from here. Go to the GEX bridge. You have 2 download links right there. You can get started quickly. A bunch of other stuff are live. You can now also get DEX, DEX, or Delta heat map as well. I know many people love it. It's right here, and we can check, I don't know, Microsoft. So this is for delta exposure, and you can see the big nodes in just one screen. Those are some of the big updates. We are constantly improving, and focus is journal, making the journal more intuitive, more robust, more friendly to other currencies, and so on. So yeah, any questions, Luca?
Nice.
Any thoughts?
Yeah, it's easier to look at what we're building on these live streams because then I see you using it and then I get the idea. So first of all, I think we should have one button which increases the fonts and decreases complexity even further, like extremely simple, something extremely simple. And another button then opens everything else. So something that can easily switch between maybe active wheel and nothing else and everything else, if you know what I mean. And then
Yeah,
the second thing is when you were showing, yeah, this is more for me. I think a lot of people don't know that there is trading view integration now in the app. For GEX, I think we should promote it much more. This is a note for me. I think that page should be huge and everybody should be able to find it that you showed us for downloads for desktop app. And another thing you were showing, manual adding. I think this should be in the onboarding. I think this would be huge. And it should be maybe one of the steps. When you register, one of the steps is, already you don't even have to add, we add it for you. So just that you see how it works, how it looks like if you connected your broker.
I agree.
I think that would be
agree.
big.
Yes,
Yeah,
that's
because it
right.
still work. Creating manual positions and adding portfolio manually is still work. If it's random, it's good just to see how it works, but we have that in Sandbox, so we gotta figure out somewhere in between. So it's not too much work, but still, if somebody doesn't want to connect their broker, they can utilize the features completely.
Yeah, right now people get an option to like create a demo portfolio with pre-populated positions and a manual broker in one click. But I cannot do it right now. Like it's just on the onboarding as an option. I think we should do it manage broker and add the demo here as well.
Yeah, because I think it is there's a lot we want to show, a lot's possible. It's difficult to prioritize, but that's beauty of software and making great software. We're gonna get there. We're simplifying all the time.
Yep.
Very nice. And what else do we have here? What else do you want to show?
Yes, find deals. One thing that took us too long to do is this clear all button. So I don't know, sometimes people go into study income strategy and then see like I zoomed in on my screen and this done tab is blocking my apply study income button. That's a bug we're gonna fix. Like right now, you can remove this and then you can apply. This done tab that just happened automatically. But then let's say people want to get rid of this strategy. Look at this. There's just so many filters, and like you don't want to click one by one by one by one, so you can just clear all and
Very nice.
get out way. So this kind of simple improvements are happening all the time, and then a lot of updates on the journal. We fixed it for I don't know other currencies. So if your broker is in let's say euros or
big, yeah.
Czech dollars, now it's converting them properly, and the Canadian side as well. So
by the way, we have tons of people coming from Singapore, which is the biggest city on QuantWheel, guys. So yeah, if you're coming from abroad, you probably want to integrate brokers that are maybe popular either in Asia or somewhere else. We're working on the integrations and closer partnerships with them, so you're going to get news soon. What you reminded me of is what's interesting to me from the day one of QuantWheel. We were talking about adding other strategies to QuantWheel. We right now are very strong in option selling, but we don't have much in option buying. But I see the screener here hiding for GEX, and I think huge thing on the UX would be renaming GEX dropdown into directional trading or day trading or something which everybody will recognize, and then having screener opening up first, and then GEX AI, then GEX heatmap and everything else, then option flows, last replay and workspace. Something, I think we can do something interesting there with time.
Yeah, I completely agree. So I personally like this screen for options buying. In one screen, I mean, I can set up my the regime I like to trade, but I can see many different setups in one screen with the actual GEX levels, with the gamma flip, Vana points.
I love this. Yeah,
this is like my current terminal when I'm looking for ideas to trade, and I can quickly see, oh, this is actually XLE.
I think this is
huge
super cool
node, right?
Yep.
And then if I want to get some trade ideas,
I think this is
with
super
one button
cool.
analyze it. So
yeah,
we are still improving this, but for me it's very useful. And then I think starting next
I think
week,
something like that for wheelers also.
Yeah,
Sorry.
I agree. Yeah, I really like this view. I'm thinking to just make it into a mobile view first for wheelers. Like if you can just see this with your cash secure put line, it becomes a lot easier to kind of visualize what you're getting into, right?
Yep. All right. Enough about the product updates. What's happening with dollar? Can you tell me what is your strategy? What are you doing?
So first of all, there's a lot of misconception. A lot of popular YouTubers saying, "Oh, we've started printing trillions and trillions of dollars. There's a QE coming." This is all false. So whatever Treasury did is there's no new QE. There's no new dollar printing. They're basically just paying off their long-term debt with the short-term debt. So they're issuing new short-term debt, pay off the longer-term 30-year, and that way add a new buyer themselves to kind of keep those interest rates down. This is nothing new. They're doing it with 10 years already with all the other bonds. So there's no new money coming into the system. There's no money printing. That's one thing. That's conception on the YouTube. Like some YouTube for just ramble without even. But the concerning part is this is just like doing your credit card, paying off a credit card, a new credit card, and just circling it around. Eventually, if you have everything short term, you're gonna get the whole country into a trap. Like once, if it all goes into the short term debt, the government will lose optionality, and the short term debt is not good for the government. So if the rates spike quickly and you have to refinance the whole debt of the whole country, then you're screwed, right? And that's why governments love 30-year bonds, and that's why the people are just worried about the long-term impact on the bonds and then the dollar. So you did see gold spike as well, and the dollar go down. Just the charts also show us that all the other currencies basically are much stronger than dollar at the moment. And I live in the US, so just by living here, I'm long American economy and the dollar. We earn in the USD, so I think it's smart to diversify. That's all. No, like doomsday stuff. But yeah, if you just have everything in USD cash, I think you should start to diversify.
And what would you do if you were me? I live in Europe. I spend euro, but I receive dollars often.
If you spend euros but earn in dollars, that's a problem. Let me just show you the chart.
Yeah, I love the dollar situation after COVID. For some time, it was really good to earn in dollars, spend in euros. Right now, it's not the happiest place.
Yes, and the chart will tell you exactly what's going on. So there's a huge bear flag for 20 years, maybe even longer. And it broke right here in April 2025. And it started to come up a little bit and try to break this level, but it did. And now we're seeing a strong rejection. Usually, if this happens in stocks, for example, you would say, oh, for sure, this is going down even more. So I'm like, you could see this doesn't look good for the dollar at all in terms of euros. So yeah, I would hedge somehow against this. But if you're earning dollars, yeah, I'm not sure. You would probably have to raise prices eventually. But this is my dollar thesis.
I'm not sure. I think your
Go ahead.
internet is slower. I got a message that your internet is pretty slow, so probably my I can hear you with a delay. So sorry if I'm talking while you're talking, but I see you as a blurred image. It's probably very, very weak for some reason. But if you hear me, just let me know.
Yeah,
But
I
you
can
can
hear.
continue, just so you are aware even.
Okay. Let's go through some of the plays today.
Yeah, I wanted to say one more thing for people who are outside of the US. In the last whatever couple of years, I think last year alone, dollar dollar value, if you, for example, decrease dollar value decreases 5% that year, that means if you're living from trading, you need to earn about 5% more, which, if you think about it, is crazy. Unless probably you can earn interest on the cash sitting in your bank account where you earn a little bit more. But from what I've seen in the last, or especially after COVID, basically I didn't earn anything just because the dollar decreased, even though I was earning profits. By the time I converted it into euro, I already lost about 11% 1 year, I think, or something like that, something crazy. But yeah, go on. Sorry to interrupt.
No, that's right. Like maybe like you can hedge with, I don't know, FXC calls or holding some FXC is basically long euros, short dollars. Just to kind of be break even in case the dollar drops. But okay, some of the cool things here. I know Figma is the the pain point in your eye, but I started to wheel Figma a few weeks ago after the earnings. I think it's in a decent spot if people want to wheel something relatively cheap. Good wheeler. this one, they just had earnings. Oh man, they're just pumping right now. All right, Xpeng. And it's again, maybe the Chinese cars and stuff, but if you look at it, it's close to the historical lows, huge put wall in the positive gamma. What I'm talking about is, you'll love it, Luca. They just, so Xpeng has their robotics section that just raised a bunch of money on, I don't know, $9 billion valuation, and this whole company is worth $11 billion. So basically, you're getting this for free if the robotics section is correct. And the stock dropped on earnings because they moved. You'll see it here. They moved the quarterly earnings from this quarter to the new quarter. So like, they didn't lose revenue. It didn't get there in time. The next quarter is gonna be huge. So the company is doing okay, and their robotics is getting huge. So this is not purely just auto making. This is also a robotics play, and the valuation is just crazy low. So one thing to consider for you, Luca, as a guy.
Thank you.
I just sold a bunch of cash puts on.
This is super cool.
Yeah, not something that people will talk about because, hey, China is not cool. But one thing before I give it to you about China is not cool, you'll want to see this FXI divided by SPYI. I'm not sure how much history this have, but let's take a look. So the FXI is basically China S&P. Okay, there should be more history back, but this is basically at the historic lows right now. So the ratio between China and America right now is at the historic lows that it has been also here before this 2000s spike. So I just like to buy it when they're cheap and then sell when they become expensive and be ahead of the herd. Yeah, I could be wrong, but I just like being early. So there's so much more
nice. This is a
upside
good.
than the US. Yeah. All right,
I
Luca,
think
what do you have?
there will be a huge trend. I think there will be a huge trend of moving capital outside of S&P 500 for the next couple of years, just because of all the people who are talking about the US not being able to pay off its debt and overvaluation of S&P 500 stocks. Even though I don't think really that they are overvalued, I think that there are some illogical things happening, but at the same time, money is going elsewhere. So the stocks like CoreWeave basically have 250 billion in contracts for a reason, that there is really that much demand. So I don't think it's overvalued, but the sentiment is moving outside of the US. People are afraid to invest into something which will drop or stagnate for 10 years and not get their return. This might happen, might not happen. Historically, you can check the charts and see different situations. But I think money is going to go to Asia, Europe, and Latin America more, just because people are looking at it. And might be that China will actually get maybe not a lot of money, because it's China. It's a, let's say, communist country, and people don't maybe have enough trust as they do in the US because of history of the US. But
I'm so glad you said this, because this is my next chart, Luca.
It's crazy for me to see these valuations, because in the US they would be probably 5-10x higher. And I don't know if this is predictable, that it'll go up. I don't know enough about China. You're my plug for China.
So no, just on the world view and world economy. Since the war in Iran, there's only one government bond that increased in value, and that's the Chinese bond market. All the other bonds in the whole world are going down. Their yields have spiked. Only China went down. That's basically telling you that there's like everyone else is selling the whole world, all the bonds, Europe, America, Japan, buying Chinese bonds. That's telling me that the world trusts China and China as the, so like you can see the ratio of US yield versus China yield has gone up, meaning the US yield is getting up and the Chinese yield down. I can show you the separate charts as well. So
is that related to China buying gold?
that's one thing, but China is seen as the winner of Iran war. I think the whole world is looking at the US as already, and yeah, this is one of the reasons. It's basically China showed we have so much oil. They have like 1 year reserves of oil. They don't actually need Iran. They actually stopped buying the world's oil economy from crashing. So they're the good guys in the war. They are
Is it really because of
showing
that?
their
Because
strength.
I mean, I don't think they're such a good guys to stop the economy from crashing. I'm not saying they're bad
No.
either. I don't think any country would do that just because they're so good. But there are different
No, it's
theories why
showing
they
them.
did
It's
did
showing
so.
their strength. So they did it to show, hey, we're so powerful, we can let the whole world run and still come on top. So they're saying to the US, hey, we're like this war, like you can't win it. We don't have to get involved. We don't even have to buy oil. We don't care. You're so powerful. We don't care. So that's also telling America, don't mess with Taiwan. If we want to take it, we'll just take it. That's telling America, we are so sovereign. We have such a good fiscal policy that we don't care about this war. We don't care about it. That's showing them, hey, they can control the oil. That's the
But
whole
is
thing.
it?
It's about oil.
I know they did this before. It's not the first time they stopped buying oil. So I'm not sure if this is to show off because I think they're smarter than that. To show the world who they are and what they can do. I think there's something much more logical than just ego or power move, because I think that would be stupid from China to risk or do something that they think would be smart otherwise just to show the world. But okay,
It's also
maybe
self.
this is a side product of it.
Let's say crash all the other economies and then they become the top. They could do it, but again, like China exports all the world's goods, and they need someone to buy it. If they crash all the other economies, then there's no buyers for their products.
That's
Right.
probably the reason. Yeah, that's probably the
Yeah.
reason. Yeah.
And then, but I mean, this chart is showing you like in one chart, what's going on with the world is that only Chinese government yields are going down since the war started. So take what you want from it, but this to me says that China won the war.
Yep. No, I agree about that. I mean, okay, just to be devil's advocate, you cannot win the war if there was no war officially, but they are making smarter move. Basically, they're as much as anybody else who didn't get involved or is more independent than countries that just import. Like those countries were smart in this instance.
Yeah, sorry, I got heated up about this. It's a very interesting thing to look at the bond market. It's super boring, but it's telling you some stories. All
Yeah.
right, and it's not options per se, but it does paint the picture. So like you know where to buy options, where to sell options. All right, what do you?
Yeah, what I did in the last couple of weeks. So I was not on every live stream. Unfortunately, I got sick and was traveling and stuff like that. But what I did was I used our QuantWheel intelligence, and I was looking at different stocks to see what my long-term portfolio would look like and what is smart thing to do. And I was looking for different ETFs that pay a good dividend and would be weird if they dropped. And a lot of them you heard about. One that I didn't talk about because I know about it, it's nothing new for me, is SCHD. And it has 3% dividend, but it's growing, its dividend is growing about 10% per year, 8% per year, and the stock is moving upwards. And then you have also, I'll go and show you a couple of those guys. 1 second. And the reason why I'm showing you this is I'm moving towards holding something that is more kind of liquid, stable, the opposite of what I did with AI. And this is SCHD. And it's something that's very well known in the world right now. It wasn't before. And it's growing nicely because more and more people go and invest into it. 3% yield per year, and it's growing about 8% per year. This is interesting because if you hold it 10 years and it's growing 8% per year, I think the yield increases to about 8% or something like that. Something really nice. And there is SPYI. This is NEOS fund. I think NEOS fund got acquired by Goldman Sachs, if I'm not mistaken.
Interesting.
Which is a really good sign. Now, don't take me for a word, but I think this happened. Maybe you can check on Google in the meantime. But these guys have really nice ETFs, and they give you about 10%. It's not the rule, but about 10% every year. And if Goldman Sachs is behind them, that means that income funds, which is the new trend, are becoming a thing maybe. And those are not going to appreciate much. You cannot expect them to explode if, for example, S&P 500 explodes, but it's going to be protected downside with limited upside, basically. It's the same thing with QQQI. This one is following the QQQ, the tech. Similar thing. You hold this for a couple of years, you're probably going to be happy. The same thing which already exists for a long time. Basically, NEOS is probably the answer to JP Morgan's JEPQ, which is there for a long time, also 10%, and JEPI, 7%. These guys, probably if they're JP Morgan's and Goldman Sachs of the world, and the goal of these funds is income, they probably will not do this and release an income fund if they let the net asset value drop. They probably care about their brand enough to buy back their shares so that there is no massive drops and continue issuing yield forever. So I trust that these guys, JP Morgan, Goldman Sachs, will care enough to continue paying 10% and increasing it year after year and not allowing net asset value drop. This is my bet. And this is what I'm going to invest a lot of money in the next, 6 months or so.
What happens if S&P goes down? How do you protect against that?
I mean, you can do a lot. I won't do much. I don't care if it drops. I will keep getting 10% yield. And it is an income fund. They will have to do this. If they don't pay a yield, it will drop to zero, and JP Morgan will lose brand recognition. They're risking a lot. If it drops and JPQ drops or SPYI drops, okay, you hold it for 1-2 more years, you lose that 10% to break even, but then after that, you just continue. If that doesn't happen, great, you have a reserve for the upcoming years. But this is a different strategy than just holding and waiting. This is more of an income game. And it's not that I'm going to put all of my money there. I'm going to diversify. I'm planning to find 15 to 20 of those, put a little bit of money in each, and then either use that income or wait for the time when a big opportunity opens up, everything drops again 20, 30, 40%, and put a lot of money into something that is, again, more active investing. And then I will see.
Now when you talk about it, I remember there's a gold income fund as well.
Yes,
but I'm curious,
gold
should we
iGold.
also provide, like, okay, I don't like to pay these management fees. What if we just have QuantWheel doing the same thing as those guys do? Automatic strategy for by wheeling gold without management.
Yeah, that would be huge, because if you think about it, JP Morgan wheels SPY.
Yeah,
that's the easiest thing you can do, probably. The thing is that if they earn 30% that year, they will keep 20 and pay you 10, and use that 20 either to pay themselves or invest back into the fund as a market maker, so that there is no huge drops. Buy back the shares that are being sold, keep it stable, and after 5 years, they are double the fund, basically. I think that's what I would do if I was them. And I think they earn much more than 10%. You can find the financials, but they know what they're doing.
Yeah. So if we can give people the same thing, keep the control, or just like design your own SCHD, right? Pick 15 stocks you like and create an income fund for yourself. Would be a cool cool next step for QuantWheel, I think.
Yep. Yeah, I agree.
Let us know what you think
Right.
in Discord or comments about this idea.
And okay, I think this is it for this live stream. We're gonna go back to work, guys. Lots of things to do until the end of this year. We're looking at this long term and everything. If you're watching us for a long time, we're making sure to deliver everything promised. So we're gonna go back to work. Thanks for